The Greece talks have been going on for a long time. I mean, it shouldn't come as a surprise to many that the talks didn't move further forward over the weekend.
So I asked the 3 or 4 economists, including our strategist Gary Jenkins, what they thought, where they thought the euro would be, where they thought boon deals would be, and where they thought the stock markets would be. So euro initially goes weaker if Greece leaves, and then gets stronger because Germany doesn't have to bail out Greece anymore. Peripheral yields go much wider. Core yields go much tighter, i.e. Germany goes tighter, safe haven. Peripheral goes wider on the back of, think about Spain, think about Catalonia, think about UK having a referendum in Scotland and all that. So if you begin to get entrants leaving the Eurozone, then you begin to get fragmentation and risk. And then the other question is what happens to stock markets? Stock markets hate uncertainty. They like growth stories or they like non-growth stories. The uncertainty of Greece leaving is just that. It makes them volatile.
But in terms of the actual, I want to say almost monetary impact, I mean, it shouldn't be that big, should it? It's less than 2% of GDP.
It's de minimis. It's like 1.6 or something exactly.
So it's all the unknown uncertainties, like trade ties, like the link between North and South,
your
stuff
uncertainty.
like that.
Let's say I gave you $1 million to invest today, and I said, you have to invest it by the end of this year. Would you be in a hurry to invest it this summer? You'd probably wait till
maybe
September.
on the back of ECB support, I might want to continue that supposed rally, right?
Yes, I mean the only thing keeping Greece, together right now is the ECB ELA program for the banks. Right? Capital controls are likely to come into place. I think there's about 70 billion of cash in the banking system, specifically from the ECB. Now, they are key, right? If they begin to pull their support and say, look, guys, you didn't come to an agreement with Troika. We're part of Troika, we'd like to play ball, but we'd like to also not give you free help when you can't negotiate. That might be the second shoe to drop, i.e. the banking system the liquidity in the banking system disappears as a result of ELA being pulled back. You've probably heard all this already. I'm sorry to rehash old stuff.
I have, but it's still kind of, I mean, everybody has a slightly different view still, right? So we're kind of trying to gather together what most people think, I guess. Right?
So they're not going to climb down. I think it's going to go to the 11th hour. I think there's going to be maybe a default on IMF and on bilateral debt, but not on external debt. And you know that old joke. What's every politician's goal? It's to be reelected. So I think they're going to give in the 11th hour so that they can be in power. Because ultimately, if they're not in power, new guys come into place, and it all gets sorted out very quickly.